Happy 2025. We're back with our monthly episode of Happy Half Hour. That's Toby Weber. I'm Nick Shermans. Toby, what's on your mind?
The only thing on my mind as I sit here getting ready for this call is, with all the advances in AI, when is somebody going to come up with a application that gives me more hair in my Zoom calls? I mean, you would think by now I could press a button and I could have whatever hair or facial hair or whatever I wanted as a filter, but I'm just not seeing it.
I'm pretty sure a teenager could hook you up either on an app or, they've got their own filters and emojis you can add to people, but that's not my area of expertise.
I may be getting less hair every single year. It's very frustrating.
I've got helmet hair. Like if I grow my hair out, I really have an afro. I could braid it. It's not a good look, obviously, but my hair is just getting grayer. So I turn 43 here in a couple of weeks. And I would bet by 45, I'm completely gray, which is fine.
So that's not a toupee then?
Not a toupee.
You can't see the snaps.
Not a toupee. I have friends that dye their hair. I think that's very time intensive and it seems like a lot of effort. So I'm just going to embrace the gray and go with it. It makes me look older.
Fair enough.
I've got a quick question for you that just popped in my head. So when someone says they're on the wagon, like trying not to drink, is that on the wagon or off the wagon when you're dry?
When you're dry, you're off the wagon, or you're on the wagon when you're dry.
You're on the wagon when you're dry.
Yeah, because
you're off the wagon.
I think you fall off the wagon like you're on a wagon drinking, going to the bar, and then you fall off the wagon. So I think when you're not drinking, you are on the wagon.
Maybe our viewers can comment because a lot of people drink over the holiday and then January they're dry. So I've got people telling me they're on the wagon and they're off the wagon and I don't know what's what.
I think when you're on the wagon, you're dry.
Okay. So you have no clue. You're just guessing. So one thing over break that I realized about myself, and maybe some of our clients that just retired can speak to, break is fine. The kids are home from school. We do Christmas, New Year's, we have birthdays and all that. And the work weeks are just lighter. So we log on, we work in the morning, but it's just not the same as being in the office and fully engaged with client meetings and prospect meetings and all that. So what I learned about myself is I need to retire to something. I have to be doing something. If I sit and do nothing for 3 straight days, it's just not good for me. I get bored, I fall into bad habits. Not that I'm on the wagon or off the wagon. It's just I'm not doing productive stuff. I don't know if you can speak to that.
So it isn't that you recognize you're taking a break. It's just that you get antsy and you feel like I'm not doing anything. I'm not accomplishing anything. So what am I doing? And then you start making up stuff to go get involved in, and that's not healthy either.
I'm just laying around in my sweatpants and watching football and just not being a productive human. Like my workout slipped a little bit. I was eating desserts. Like I kept going back to the fridge and getting into my mother-in-law's pies, which are really good. She made a cheesecake, an apple pie, a coconut cream pie, and I was just like gouging in those. So I just felt worse about myself.
Well, you need structure. I mean, I've seen your calendar and you pretty much parcel out every activity that you do. You probably just need a little more structure, even in your downtime, to kind of keep you focused and keep you on the rails.
Maybe, but I need to retire to something. I'm not one that can do well when I just sit. And I think a lot of our clients are like that too, because I've heard so many stories. Clients have structure, they're producing, their identity's tied up in their career. Then that goes away and they feel lost. There's this period of finding yourself, finding your new habits and routines. And that's something that really clicked with me. Connecting the dots of some of the challenges our clients have conveyed over the years, that applies to me as well.
Yeah, there's definitely a transition when they go into retirement. And if they're not ready for that transition or they don't have something that's going to keep them energized, motivated, getting them out of bed in the morning, those are often the retirees that struggle a little bit out of the gate because they don't have that activity to throw themselves into.
Okay, as we turn the calendar to 2025, we're going to switch gears. As you look ahead at U.S. markets, what's your biggest worry? And this is not necessarily the top of the house view, but what's your own personal biggest worry? I feel like I ask you a variation of this question every podcast.
I think my biggest worry continues to be valuation. And again, you go out of your way to point out that valuation's a terrible timing tool, but you can't argue with the fact that we're pretty richly valued here. So we either need to grow into that with improved earnings this year, or at some point the market may run into some headwinds from a valuation standpoint, and there may be a catalyst that kicks that off. So, I'm always the glass half empty guy. You're the glass half full guy. So that's probably the thing that worries me the most. I would say inflation is a lesser concern, But depending on the reaction, if we do get any type of economic weakness, depending on the reaction from the Fed, depending on the reaction fiscally, that could reignite inflation. But I think that's probably a late 25, 2026, potential issue. So those are some of the things that concern me. And that was actually one of my questions for you this morning is, as you look at 25, are you optimistic? Are you pessimistic? Are you agnostic? And do the results in 23 and 24 color your view on 25?
That's a lot of stuff. And I think I share the same concerns that you do on the US equity side, especially large caps. And I think I've culled it down to the most important question. And to me, the most important question, if I'm going to put on my Wall Street hat and try to play the market oracle, is does the AI bet pay off? It's tough to imagine US stocks holding where they're at or going higher if the AI bet does not pay off, given a lot of money has flowed into the companies that are investing in AI. I saw a note this morning that I didn't know about, and it caused me to scratch my head. So I'm going to read something so I don't butcher this. But OpenAI, of course, launched ChatGPT back in November of 2022, I believe. OpenAI is losing money. So in 2024, they lost $5 billion on $3.7 billion in revenue. So it's hard to fathom that the pioneer of the AI movement is losing money. They're the most talked about company, and they're losing money on their main AI product. So I don't know what that means. I don't know if that's a canary in a coal mine. And then zooming out, like one question I always ask myself, like there's all these consulting groups that say AI is going to take like 80% of US jobs or 80% of jobs. We just got through an election cycle where wages and job growth and employment really matter to the American people. How is that good for society for AI to take 80% of US jobs? Like, how is that going to fly? So there are certain pieces to the puzzle that I don't get. I certainly get AI as a supplement to humans, making us more productive. We use AI at Pure Portfolios, not only in our investment process, but in our back office. It's a cool technology, but when I look at the extremes and play the movie forward, I don't think the puzzle pieces necessarily add up.
Yeah, I think we haven't quite seen the killer application for AI, and a ton of money is being spent by a lot of large companies, Apple, Microsoft, Amazon, NVIDIA, et cetera, related to AI. But I'm not sure that we've seen the application that's going to promote AI into either growth in sales, productivity gains, or cost reduction. And that's really where people have to get a return on all this money they're spending. And that's the question mark today is, are they going to get there? These companies can afford to spend the money because they're generating tens of billions of dollars a year in cash flow. But at some point, you have to get a return on all that investment. And I think I share the same concern. We just haven't seen it yet. So hopefully we'll see that in 2025. I don't think either of us believe AI is going away, but is it going to turn into, like the internet back in the late 90s, early 2000s, where yeah, there were some bumps along the way, but ultimately the internet turned into one of the greatest tools and productivity improvements of our time. So I don't see that yet from AI. Perhaps it'll come, but I don't see it as of yet.
Yeah, for those that watched our latest commentary, they have shown this graph a few times, but it's a parallel between the mid-90s and the internet boom and the launch of ChatGPT and the AI boom. And the lines, the stocks that represent when those technologies were launched, the NASDAQ is very closely aligned, moving up and to the right. So there's been a lot of parallels. Certainly the internet boom paid off. Obviously, commerce, the flow of information, you can launch businesses online, the social media networks. So all of that has had a payoff. I think we're waiting for the AI payoff. And I think once that question is answered or becomes more clear, then I think you can understand if markets are going to continue to move higher, flatline, or even go down, because a lot is riding on this theme. And I don't think a lot of investors know that 40% of the S&P 500 is basically an AI theme. So it's just something to be mindful of. We're not saying markets are due for a correction, but there's certainly a lot riding on the payoff of this AI theme.
So I don't want to step on the toes of your most recent video, which I would encourage folks to go watch, but does the concentration in, 7 or 8 stocks that we've seen the last couple of years, most of it centered around AI, is that something that's concerning to you? Or is that kind of hey, it is what it is. These companies are just, ridiculously successful and will continue to be so. Where do you fall on that continuum in terms of being concerned about the concentration, or nope, it's not that big a deal and we have this all the time?
I tend to lean into it's not that big a deal, but you need to pay attention to it. I've said this before, I've penned this many times in previous blogs. Having a concentration at the top of an index is nothing new. Like back in the 90s, it was banks. Before that, it was big oil. This time it's tech. Now, once you reach the corporate mountaintop, it's really hard to stay on top. So there is concentrations. The players at the top do change. When you zoom out and look at the rest of the world, actually US markets at the top are less concentrated than most every other country. So most every other country has one or two businesses that explain a large chunk of their national index's performance. Now, the other side of this is when you're concentrated in a handful of companies, it's great when they're going up. But basically the fate of the index going forward is predicated on how these companies perform. So it's a much more concentrated bet. And my fear is people have the illusion, let's say that you're buying the S&P 500, you've got the illusion you're buying 500 companies, which essentially you are. But if you invest $100 into the index, almost half of that $100 is going into a handful of companies, which you may not know you're making a momentum bet into 7 to 10 technology companies that are really riding on this AI theme. So folks just need to know what they're getting into.
I think that makes sense. As we get started here in 25, is there any advice that you would give to clients with regards to their portfolios? Obviously, the ones we're managing, we're going through a review, we're going through rebalancing as needed. But any other advice you would give to our clients as we get started here in the new year after, quite frankly, a couple of good years in the stock market in 2023 and 2024?
I don't know if this is advice, but I will say investors might do well to just revise your expectations down. 2023 has been a really good year. 2024 has been a really good year. Just because those two were really good years doesn't necessarily mean this is going to be a really good year. And when you look at the values of US large cap stocks, a lot is priced in, a lot of good news is priced in, a lot has to go right to live up to where we're currently trading. So I think investors would do well to manage their position sizing, revise their expectations down. Like I said in 2022, which was a really tough market, bad markets often precede good markets, and really frothy, blissful markets often precede difficult markets. So that doesn't mean the world's going to end. That doesn't mean you can't earn a positive return. Certainly there's other asset classes that are more attractive than US large cap stocks. An investor would do well to not hang out on the extremes, right? If you're fully optimistic, if you want to shovel more into US large cap growth stocks, you might hedge yourself by buying some bonds. If you're a doomsdayer and you think the world's ending, you might do well to hedge yourself and buy some US equities, buy some small cap equities. So avoid the extremes, which, in the digital age, it's easy to seek out opinions and information that confirm what you already think. So I'm a big fan of hedging yourself, playing in the middle, and balancing things out a bit.
I think that's good advice. And the other thing that we're doing as we get started in the new year, oftentimes that's a good time to look at your outside accounts, outside 401ks, because after a couple of strong years, you might be more exposed to equities than you're comfortable with. So it's often a good time to just do a review of those accounts that are outside of pure and just make sure that you're comfortable with the risk you're taking there after a couple of strong periods.
So this is also a good time of year. We're getting close to tax season. I know it's a few months away, but I'm always amazed at some of the new clients that we take on when I look at their tax returns, how much money they're paying to Uncle Sam when they don't have to. And everyone has to pay taxes. No one says you have to leave a tip. So one of the things that we see, one is owning mutual funds in taxable accounts. That is a surefire way to light money on fire, because those mutual funds, it's not obvious, but they often distribute capital gains to owners. And that's not selling something, that's just owning the fund. The fund managers are buying and selling bonds, stocks, or commodities, or whatever that mutual fund owns, and they pass along those realized capital gains to shareholders. So we don't own any mutual funds. We find ETFs are much more tax efficient, transparent, they trade better, they're lower cost usually. So if you own mutual funds, if your advisor owns mutual funds in a taxable account, that's an area to look closer. And then the other part is targeting income strategies or dividend strategies in taxable accounts. The dividends are great, but there's no way to shelter them from taxes. So those two things, income, dividend strategies, and taxable accounts, you are definitely paying more in taxes than you need to.
Yeah, and we can definitely help folks look at that if they're not sure what they're looking at, or they're not sure, what the risk is or how they're positioned. That's something that we could certainly jump in and take a look and give them some feedback on that to make sure that they're not, as you say, leaving a tip on top of their tax bill. What is one hope or goal that you have for 2025? Could be professionally related to the business, could be personal. What's one thing that you're hoping to have happen or see happen or make happen in the new year?
This might sound stupid, but my goal is to stop overthinking things. Stop thinking about things so much. I saw something, it was like a Buddhist quote that said, a person gets shot by 2 arrows. So you get shot by 2 arrows. The first you feel is pain, right? Pain. And there's no way to avoid that. So to translate that into life, bad stuff happens to good people every single day. That pain you can't avoid. But what ends up causing people to suffer is their reaction to that initial pain, right? You get inside your own head, you overthink things, you overanalyze. And the quickest way to be miserable is to overanalyze everything. And I'm certainly guilty of that. So my goal in 2025 is if something bad happens to me, I can't control what happened to me. I can control the way I think about it. I can control the way I react. And I always tell my kids, let no one steal your joy. So I'm just gonna try not to overthink, take that event, brush it aside, and just move on and be present. And I've already started to do this, and it really does help. It sounds really simple and stupid maybe, but the early returns are good.
I like that.
What's your focus?
It's not too dissimilar from yours, and that I need to find more time, or more accurately, set aside more time to just think and reflect and prepare. We get so busy with the day-to-day. We both have kids, we both have families, we both have jobs, running a business like Pure. And sometimes you can just be on the wheel and not really stop and reflect, not stop and think, not stop and course correct. So my goal for 2025 is to be more intentional, reflect more, set aside time to think. And I think hopefully that will bring me a little bit more, less stress and a little bit more positive outlook moving forward. So that's one thing I'm going to try to do in 2025.
No, and I think we've both been brought up, and this is maybe a symptom of the way Americans are, but we're always trying to optimize and improve. And sometimes taking a step back and going on a walk or taking a break can be viewed as lazy. Like, right, if you work in corporate America and you take a 15-minute walk at lunch, folks might think, hey, this guy's a slacker, he's outside. But I can't stress enough how important it is to stop staring at a screen, to shut your mind off, to declutter your environment, and just let your mind float. Like, some of the best ideas I have is when I'm not thinking about anything and I'm just sitting in a quiet room or taking a walk or driving my car. It's like, just let your mind float. And that's really where the magic happens. But unfortunately, in corporate America and business, sometimes it can make you look like a lazy bum.
Okay, how about this? What is one reflection or memory that you will take away from the 2024 holiday season? Something that stuck out to you that you really, because we go so fast from Thanksgiving to Christmas, it's all a blur. As you look back, what's one memory or thought that you will take with you from the most recent holiday season?
I'm playing the movie back in my head right now. Some of it I've buried down deep. So we're trying to do less stuff and more experiences, which I think I've mentioned on this podcast in previous episodes. My wife and I decided it was finally time. My youngest is almost 6. We're at a point where we can comfortably get on an airplane and not have to deal with diapers and crying babies and all that stuff. So we are taking the kids to Hawaii for spring break for a week. And the reaction when we told them was pretty priceless. They've been wanting to go for a while and swim with sea turtles and scuba dive, and they don't even know where it's at, really. They don't know much about Hawaii, but they've seen some stuff on YouTube. So the reaction on their faces was pretty cool. My oldest actually started crying, which was great, but it was tears of joy, obviously. So that's probably the memory that is seared into my brain. How about you?
Yeah, I think in our case, I look back and there were 2 or 3 instances where we just had our family together. And again, we're not all under the same roof, kids that have finished college and moved out on their own, which is great. But when you get everybody back under one roof, Could be for a half hour, could be for a 2-hour dinner. But those are the times that I really appreciate and appreciate more as I get older and they get older. So we started I guess it's now a tradition where we go to a nice dinner about the 20th of December. And it's just kind of, okay, everybody take a break, exhale. We're going to have a nice dinner and kind of enjoy each other's company before we get into the heyday or the hubbub of the holidays. And so we did that again this year. And it's quickly becoming one of my favorite traditions because there isn't something going on. We don't have to entertain people. We can just get together and break bread as a family and kind of catch up before the holidays get crazy. So those are some of the memories I have from the most recent holiday season.
That's great. So we're coming up on happy half hour. It'd be weird if we went over a half hour. So we're going to wrap it up. This is the January edition, happy half hour. That's Toby. I'm Nick. If you have any topics you want us to chat about next time, feel free to shoot us a note at insight@pureportfolios.com. We'll see you next month.